Started. My name is Nick Araco. I'm the CEO and founder of the CFO Alliance. We are a community of over 4,000 chief financial officers who gather face-to-face and online for collaboration and exchange with two purposes in mind. Number one, to empower confident decision-making amongst us in a time where we are challenged to do that, build confidence in the decisions we make, and more importantly, to help us build and utilize a network to make sure that we stay leading edge, cutting edge, and on top of our game as the role of the CFO continues to increase in scope and visibility and responsibility. So I'm going to ask a dangerous question. Sorry. How many of you have heard of the CFO Alliance? All right, good. That wasn't dangerous then. Woo, I've done that before, and then there's like one hand kind of goes up. So the purpose of me being here is not for you to hear my voice. It's for me to stimulate dialogue and for you to hear the voice from these panelists. And I have had the pleasure to get to know these panelists personally and professionally over the course of, in some cases, many years. And I've also asked them to be a part of this because I think they're going to bring a very unique perspective to a discussion about corporate growth. So with the intent and purpose to maximize the time they have to share with you their thoughts and insights and to garner your questions, I'm going to avoid allowing them to go one by one here to introduce themselves, but instead I'm going to pose a question that will allow them to share with you who they are and where they came from. So I'm going to start down on the end with Mr. Allen, Mr. Jeff Allen, the CFO of Gold Mobility. Jeff. Okay, everybody all day long has been talking about things that we as CFOs have to do, and that laundry list continues to expand, and we're still the poster children for having to do the most with the least, right? And we're also seeing our opportunities and responsibilities in terms of both internal visibility and leadership as well as external visibility and leadership expand. And the five of you are here today because you thrive on that, right? Your background is very different though, Jeff. Tell us kind of a little bit about how you got to where you are. More importantly, talk to me a little bit about the execution of your growth strategy in an industry like mobility that is a bit of a wild, wild west or re-engineering, and an entrepreneurial environment as well, taking into consideration that the economic and business climate still is tempered by uncertainty and noise and increased competition. So an easy question.
That's a mouthful. Do I have the whole session for myself? I'm Jeff Allen. I'm the CFO of Gold Mobile. And I will tell you that being CFO is the loneliest job in the corporation. You all know that because you have no peers. Either everyone works for you, or you are the trusted advisor to the board and the CEO. So, but nobody does what you do. And so here we all are together kind of learning from this. I became a CFO because no one else in the organization was doing the job. And it bothered me that no one was doing the job. And as we continued to grow, I basically stepped into this role. I have a background in banking and investment banking. And at first, I just didn't like the way the checkbook was being run. This was a little company being run out of the checkbook, and I brought an accounting system. And after we built an accounting system, we built an HR system. And piece after piece, revenue recognition, inventory controls. Each one of the things that you master, you give to your controller, and you move on. Right? And your president says, so what have you done for me lately? Why do I need you? It's like the controller is doing everything. What do you do? So I could go on. Nick asked so many questions on growth. I find that I love being a CFO because every day is different. We are treading new ground. If you're doing the same thing year in and year out, you're in a company that's not growing. There are two types of CFOs, which I'd like to talk about. There's the CPA and there's the MBA. The CPA is trained at what happened. He's looking over his shoulder and he adds up all the numbers and makes sure that they're correct. gives a great annual report, and files good taxes. And that's his focus.
Or her.
Or her. And the MBA is trained to basically looking forward. And the only reason the MBA keeps any records is to figure out what to do better next year. Taxes? Yeah, we'll pay them, but don't spend any time or money on it because it's not a productive activity of the company. These are two different looks. As an MBA CFO, I look at my role as the chief strategist and the chief risk control officer. So I look at where are we going, what assets are we going, resources are we applying and deploying, and then how am I going to control the risks that the company faces.
Well, but Jeff, you're also in a company that, given its relatively short history, we'll call it, in some way, shape, or form, and an industry that is ever-changing, that you have an environment and a culture that you can breed around that. And I want to take that one comment and I want to pose a question to Tom Rachowski here, okay? Tom. Yes.
Just a comment about what you said about the MBA CFO and the CPA CFO.
There's a challenge. I was hoping I was going to challenge that.
I'm glad you said that because I was waiting for that piece.
We were waiting for that.
I totally disagree with you. I mean, a CFO is a combination of, a good CFO is a combination of both of the things that you described. Of what happened in the past and also looking to the future, worrying about your taxes, but also looking at the next acquisition, where the company is going to go. It's really a combination of the two to be the good CFO.
Yeah.
There's no question about it. Where I make the distinction, and it's in my experience, it's based on our trainings. Frequently I'm asked, but I get calls from headhunters, as we all do from time to time, and he said, I'm interested in you because we don't want to promote the controller. Because that's the job of CFO is so much larger, and to the point where the work of a CFO needs to incorporate finance, planning, and each one of the pieces that you're looking at. But if you ask a CPA to project next year, he is much less comfortable projecting the future than because he's trained not to project, but to in fact work on facts.
I'm a CPA. I'm not an MBA.
And it's a bias on my part.
No,
That is one of the reasons why I have Jeff here, is to stimulate dialogue.
At one point I was a controller, but because I had foresight and because I was concerned about the future and because I was concerned about working in a company, you also learn and you're also exposed to things. It's not all about your educational background, your educational degrees. It's what you've learned and what you've worked.
I agree. So before we, that's a perfect segue to what I was going to pose to Tom. Tom, I want you to comment on that, but I also want you to share with the group here a little bit about the company that you're a part of that has both a very lengthy history as well as an aspiration to continue to move the needle forward in an industry that we could all understand very clearly and also potentially understand the footprint opportunity that comes with it, right?
Yep.
Yeah.
I always love talking about the company that I'm with right now, but I do want to touch base though on the whole conversation between MBA and CPA. I had the good fortune earlier in my career to join an organization that they defined it as matrix management. The CFO did not report into the CEO. They reported into the finance organization all the way up through their corporate headquarters. And what that did was it created a business partnership. You couldn't survive in that environment without a business partnership. The CFO needed to understand what drove the business and the CEO needed to understand how to make the financial wherewithal of the organization grow so that they can continue to get reinvestment dollars. So I think that that's really, your key point was training, and I agree with Jeff from that perspective, that we come out of our educational training with biases without a doubt. I came in as a CEO or a CPA, but the learning that I got allowed me to understand how to become a business partner. And that brings me to Consolidated Carpet. It is a family-owned business. It's a 3-generation owned business. It started out as what we call a workroom. All it did was installation. And what we did, it goes back, let's see, 65 years now. So what happened in the late 90s was we decided that if we were going to grow this business, we needed to become a marketing company. That provided us with an opportunity for growth. It also could have drowned the company because we decided to compete with our customers. Now, I'm sitting here today, indicating that I still have a job, so it was successful. We were able to grow the business where we are now one of the largest floor companies in the U.S. And our next step really is now to expand our footprint as well as expand our product offerings. That's where we see our next challenges going forward.
So Tom, can I throw a question at you, and then I want to ask another panelist. Strategy formulation and then execution in an environment that has multi-generational issues has had success and wasn't afraid to take risks as well as your overall company strategy evolved, was already in place. But talk to me about the most recent 24 to 36 months. The company has gotten to here, we want to get here. What has that environment provided you in terms of insight and understanding about your role in helping to shape and then ultimately make sure the strategy gets executed?
That's very interesting. The organization, well, the ownership of the company is, they're very comfortable in the footprint that they work in right now, both in terms of geography as well as product line. I came on board to test those waters. In the past 2 years or so now, we've been on the acquisition hunt, and that's easily said, but not very easily executed for 2 reasons. One is that we have a very successful organization. When we look at an acquisition target, they're never as good as we are. That's not my challenge. That's a challenge of the ownership. What I need to do is I need to make sure that I identify to ownership what those targets represent going forward, not what is there today, because they're usually out there on the market because either they're looking for an exit strategy or they're not doing very well. So if there are diamonds in the rough, that's my job to bring it forward so that the ownership can decide, yep, we need to make an investment here.
Well, Tom, you bring up a very interesting point about M&A as a strategy for growth, right? And in an environment still that is increasingly competitive, noisy, but tempered by uncertainty. So it's a very interesting dynamic. Jay, you and I, on the walk from one room to another, were laughing. We've known each other for years and said, the industry you're in is just full of noise, but both opportunity. How, in developing your growth strategy, did you make sure you had the right mechanisms in place to ensure that you weren't just putting an ear to all that noise? Because as we all know, to attempt to undertake and get involved with a potential acquisition, divestiture, and the like, shifts at times not only focus but performance, top and bottom line, and the impact of that can be extremely detrimental, to say the least. So what's it been like navigating in the current environment that you're in and the company you're in?
So thanks. So I'm Jay Roberts, and I'm the CFO of Advantage Healthcare Solutions. and our company is a specialty physician billing and coding company, so in healthcare. And I've spent the bulk of my career in healthcare IT. And I would have to say that right now what we're experiencing in our marketplace is certainly one of the most dynamic M&A kind of an environment. It's a incredibly consolidating marketplace that we're in, and I'm fortunate enough that our company is backed by a couple of private equity firms that are very supportive of our acquisition program, and so we've been able to access necessary capital in order to go through a number of acquisitions over the years. So I think in 5 years, we've completed 9 acquisitions, 4 since I've been with the company in the last 2 years. So we've been pretty busy on that front. Navigating through it is interesting because I think of our marketplace, healthcare in general, as really being upside down economics, if you think about it. So our client being physicians and hospitals, if you think about their incentives, they're really, had historically not been incented to provide more service, obviously better service. And so what we find ourselves in this kind of an environment where that's all changing now. It's changing quite dramatically with a lot more emphasis on quality of care, and the result of that is we're seeing that there is downward pressure now on the amount of service that's being requested and asked for, particularly around specialists. And so the result of that is many of the smaller companies that operate in our space are simply being forced out of business at some level because as reimbursement continues to decline, so too do their revenues.
Well, Jay, I want to isolate one point. During the course of that dynamic, too, and this is an interesting result of it, your company actually took the opportunity to reposition and re-engineer its position in the marketplace. Can you talk a little bit about that?
Sure.
You used to be known as, and now you're known for. That was a result of what?
Yeah, so it was very strategic, I guess, in nature in terms of how we positioned it. And within other larger billing companies like ours in our industry, they had grown and gained scale by having a very unique niche and a focus. So they would, for instance, do billing for a radiologist practice, but they do all radiology, and they wouldn't do any other particular specialty. Our strategy was a little bit different in that we wanted to cut across multiple specialties and be a lot more diversified. And the result of that, and we kind of saw this coming somewhat over the last several years, but we've, through acquisition, again, we've been able to build scale and to diversify across multiple specialties. And so now as you think about what's now called accountable care organizations, but there's within communities, payers, providers, hospital systems are coming together with the specific outcome to try to drive better quality of care, and so they're bundling reimbursement. And so the result is we're actually very well positioned now. We're going to continue to diversify, but we're well positioned because we now have the expertise, the systems, the technology in order to provide the kinds of services that we deliver from a billing perspective to hospitals that are running ACOs.
So in that case, it was attempting to not only reposition yourself in the marketplace, but also to make sure that the people and resources were being applied towards where the company was going to be, not necessarily where it was and had taken it to, correct? Not an easy process, internally and externally, right?
Well, that's right, and one of the sort of cornerstones of our strategy was to not only move the company to being profitable, but also we have to continue to find ways to become more efficient, utilizing technology that's a part of our part of our fabric as a company, because again, as we see just organically, our revenue continues to push down. We've been fortunate enough that we've had the right systems, we've had the right people, and the right process to be able to create enough efficiency within our operating model where our margins continue to increase, notwithstanding the kind of pressure that we're getting from an individual, say, per procedure kind of basis.
So this was the case of generate new revenue, additional revenue, maybe even greater margin revenue, and scalability with what we've invested in, what we have, what we could find. Let's shift a little bit, and let me shift to Ted Stone. So Ted, this is company number 9 in how many years?
10 in 30 years.
Okay, and when we first started talking about your current company, Ecorithm, I needed an education, right? What does the company do? It took some time to explain. Different than Tom's company, I totally get. And I'm going to get to a comment about Jeff, and then I'm going to give you, you're supposed to be taking this all in, Blinn, Cirella, because there's a doozy coming for you. So Ted, talk to us about moving into a company where you're like, okay, let's start with the letter A, B, C, D, and move from there. It's not easily understood, and you have the responsibility to raise capital plus generate revenue, correct? So talk to me a little bit about your current situation, what you've heard so far.
Thanks very much. Ted Stone, CFO for Ecorithm Incorporated, my 10th CFO gig since 1984. I'm batting 8 for 9 so far. That 8 out of the 9 of them went up a lot in value. And I had the best one yesterday. Said, but we don't count what happened in 2008. I was grateful.
We were all in therapy at that time. I called my CFO Alliance Roundtable like therapy sessions. We're all laying on couches and the lights are turned down.
I get my best references actually from that company. Kept it alive through the recession and ultimately took it private. Made some money for a few people, but not as good. Anyway, the mission in any early stage business, a startup like Ecorithm is, and I'll tell you briefly what we do. We have software algorithms that you would use to suck the data out of a big building like this one on how energy is being consumed in that building. And there are literally, in this building, probably 10 to 15,000 data points describing how energy is being used. There are 4 attached to the VAV that's behind those 4 ceiling fans. And imagine how many of those there are and start multiplying. And they interact with each other. It becomes very quickly trillions of data interactions that need to be analyzed. And as soon as somebody gives you a trillion pieces of information, they've given you nothing. How do you find the abnormalities in there where energy is being wasted? We have the algorithms that do that. Now, like any early stage business, our real goal in life is to figure out if it's actually worth doing. We've got this great technology. We've got a theoretical business plan of how a building owner can make money, and therefore how we can make money, and what features and functions we have to develop, and so on. And maybe they're right, but maybe they're not. So we've spent the last 2 years now taking algorithms, turning them into software, putting them into unpaid pilot buildings to see if we could actually turn algorithms into industrial strength software. Turns out we could. Saved a lot of money for another hotel in this neighborhood, not this one, and 3 other buildings. And then our customers started telling us what our strategy needed to be.
See, now that's an interesting point. Did you ask them, or were they proactively telling you?
Yes.
Okay, good. That's a good answer. Right. When did it hit home that maybe?
Continuously.
Okay, good.
The very first, we did 4 unpaid pilots, and at that point we knew we needed to extract information from buildings in order to put them into our data warehouse in the cloud, run the algorithms, present the results back. We turned to the building engineers, and they all looked at us like we had 2 heads. Well, it turns out that there's another industry that we didn't know existed called controls contractors. And they're the people that put building automation systems into these big buildings. They're the ones who actually know how to do what we needed to do. So our customers told us, we're going to do this through a channel partner called a controls contractor. Now, that's turned out to work. And we've now developed 3 different channels: controls contractors, energy consulting firms, ESCOs, and the utilities themselves. But then we're talking to end customers, and they're saying, great, turning $4 per square foot per year for energy into $3 per square foot per year for energy. That's a great thing. I'm glad you did that. My profitability just went up. The capitalization value of my building just went up. But I'll tell you what keeps me up at night. It's having 5% of my building vacant. Because my tenants get ticked off at me because whenever it's hot outside, I use a demand response software to turn off the AC at 10 o'clock in the morning because, geez, it's really expensive to run the AC during the day. And as buried in the appendices of our reports are these things that are now page 2 in the monthly report called the comfort console. And it's just a floor map of each tenant's space with the average temperature or the average humidity or the average CO2 count. You pick the metric of what defines comfortable for you over the last month in that space. So now I'm a landlord and you're a tenant. What's our relationship? You call me up periodically to bitch because somebody's hot or somebody's cold. Let me turn that around. Now I'm going to send you an email every month with a couple of pictures in it. Here's your comfort console for last month. Sally was cold, Bob was hot. Here's your comfort console this month. Everything's beautiful. And oh, by the way, here are 4 other problems that you never knew about, but we fixed them because we used this Ecorithm software to find the problem before somebody complained about it. This was not in our value proposition when we started.
So this proves that you had the right mindset and focus to engage your customer audience, and more importantly, you were listening, and then you were able to develop your current growth strategy around what you heard, right? You were nimble.
Absolutely.
So can I ask a question along the panel, because then I'm going to go to Blinn. Jeff, do you have any mechanisms in place where you are, well, do you believe in the power of that, which I'm sure you do, engagement with the key customer to help influence your strategy, right? Challenge or validate. Do you have any mechanisms in place from a company, a culture, a CFO standpoint where you say, this is the way I put myself in the middle of that understanding so I can help direct decision making around our strategy?
Yes, I do.
Okay.
One of my-
Be specific.
All right, one of my favorites, as all of you CFOs know, the sales department says, keep your nose out of the sales department, CFO. None of you have ever heard that before. And I've actually implanted myself in that environment under the concept of Murphy's Law. Murphy's Law says what can go wrong will go wrong. And one of the corollaries to Murphy's Law says that after a proposal or a technical spec has been checked and rechecked by all the qualified people, the obvious flaw will be found by the first unqualified person to look at this. I have put myself in the position of the first unqualified person. So all proposals actually come across my desk. We're a relatively modest-sized company, so I can do this. But I know nothing about this sales relationship that the marketing department is going to make. I read this proposal, and I'm dumb and lazy. That's because I'm an MBA. And I look at this proposal, and if I don't get it the first time, I take it back to the sales department. And they say, yeah, but me and the guy, we have an understanding. He knows what he's buying. I said, yes, but his boss, who has to sign off on the check, is like me, doesn't know what you're talking about. Rewrite it. So this is a simple process that we've put in place that where, as the CFO, I bring value to the sales process.
You know what I like about that? You're actually not, it's very difficult. As the CFO role continues to increase in scope and visibility internally, and we now all have exposure to HR, IT, sales, marketing, risk management, real estate, everything we should have influence or understanding of, we're now either going wide or deep in those areas. You actually let me use what I don't know as a factor to either challenge or validate the economics behind our business or decision making around it, which I actually like because that's not using ego, that's using lack of ego, right?
Very often I find that what is missing is my favorite area, which is the value proposition. The two salesmen just assume that the other guy understands it, and I look at the document and I say, you're not showing where he's getting value for his money. And if when somebody brings me a contract and says, I want to buy this, and they say, Jeff, look at this. Now, put on my hat as the purchasing manager, I look at the value for my company, and I expect that someone else is doing the same. So we have to really, as CFOs, use our just common sense.
Well, and in some cases, admit what you don't know and use that as a way to either challenge or validate the decisions we're making. I'm going to throw a question to Tom. I suggest that if you want to take a look at a company website that tells a story of a family growing a business, you go to Tom's company's website. But Tom, I want to throw a question at you. You are so employee focused, employee experience, customer experience. What has Consolidated Carpet done to put itself in the middle to better engage its customer so that it's in a position to know and act?
Well, we are very customer-centric. I don't know of very many organizations that could survive and that are not customer-centric, but you need to make sure that you know what that means. Our customers have a level of expectation that requires us to essentially move on a dime. In the construction world, hopefully everybody's getting the sense that although we have very varied representation here, our challenges are very similar. The challenge that we have to deal with every day is a changing construction schedule. And our clients will sometimes require us to delay the job for 6 months. We'll have inventory sitting in our warehouse, and we're going to work with them until we get to the point where that construction cycle comes around for the flooring to be put in. And other times, so we've got a requirement to move up our schedules. We've built a transportation organization within our company to ensure that we are able to facilitate that need. The key to the success for Consolidated has always been to be there when the client requires us to be there.
Has that been a recent phenomenon, or was that born at its core?
It's part of the core of the
And it carried
organization.
through generation by generation?
Absolutely did, yes.
That's interesting. How many of us can say that about some of the businesses that we've been in that have involved multi-generational transfers, and in an industry that can be viewed at times as being very mature, we'll call it, to say the least. So, Blinn, you've been listening so quietly, and you've been so polite. So Blinn, let's take this all in. Blinn, you are the CFO of Sawmill Capital, and you'll get a chance to explain what that is. But I don't know how you sleep at night. Okay, because you have a responsibility at a private equity fund for driving performance at the investment level, as well as a cadre of CFOs who say, Blinn, I need to, or Blinn, you say, you need to. And an environment that, because companies like those here, every single one of these companies who are either seeking capital, looking at deals, or having their doors knocked on and saying, maybe we should be knocking on doors, are now competing with you. How do you continue to talk about strategy, growth, top line, bottom line, with all of this in play? And how have you seen, some recent opportunities for you to have an impact?
Wow.
And Blinn, by the way, the amazing thing about Blinn, you always do it with a smile. So let's continue with that question. Go.
That's, our fund we raised in 2007. So most of 2006 and into 2007. So we were sort of victims of 2008, and we have really been struggling with trying to find quality deals. And in 2008, we made no investments at all because the deals that were coming to market were either bad or overpriced. We are, interestingly enough, finding ourselves back in that same sort of M&A environment where there's too many dollars chasing too few deals, and the quality isn't there. So as we're trying to look for acquisitions, we're sort of going, and sometimes the buyer is telling us, unless it's this price, don't even come talk to me. We had a management meeting yesterday with a firm where they told my deal guys how the whole deal was going to go down. And the guys came back home. We were on a conference call, and they said this was the worst management meeting we had ever been in. And the environment for investing has continued to be really difficult for us. Now, as far as my role inside the firm, it's interesting, and you are absolutely right about the CFO being the lonely job. I cannot tell you how many times they come to me and say, you think about this funny. No, I don't. I think about it like GAAP. That's my job. So talking about fair market value, just today I had to sit somebody down and say, Fair market value is what you would get for a deal if you would sell it today. It doesn't include whatever money you got on it already. Let's get straight about that. So trying to get these guys kind of focused. I've tried to roll out a spend program across the portfolio companies. That can sometimes be difficult because you've got personalities. The people at the portfolio companies feel like you're telling them that they're not doing their job properly, so there's a lot of pushback on that. I also tried to implement sort of a insurance program, making sure that all of our D&O insurance was the same across all our portfolio companies, that it played well with our GPL policy and it fit together. And trying to do these things can be really difficult because I've got the CFOs already being beat up about the bottom line, right? And now I'm calling them going, I want you to talk to consultant XYZ, and I can see them rolling their eyes, right? And no, I'm really here to help you. So trying to sort of convince these CFOs that I'm there to help them in sort of a subtle way. But I had a deal guy tell me yesterday, listen, Blinn, of all the things I worry about, D&O is not one of them. It's so far down my list. Well, but it needs, it's not important until somebody makes a claim and then all of a sudden it's really important. So it's sort of my role to sort of sit back and go, okay, you guys are doing all this important stuff, but there's little things that you don't think about that could really bite us in the butt. And then not even to start to talk about SEC and compliance and that we just had to register and all the things they're not supposed to say and do anymore.
Well, isn't it part of that because there's so much pressure because of competition and a maturing of the industry? Tom, do you have advice for Blinn in an industry that's relatively mature and maturing on how to keep the things that could really kill a strategy or kill a company in mind during a time where the stakeholders or owners are saying, but this is much more important?
Interesting question.
Okay. Thank you.
Well, Blinn, what I would suggest is that the opportunity set is really the guiding light for any kind of deal that needs to be made. The deals that I've been involved with, it's not what the investment has been to date. It's not the profit that's been made to date. It's really what the opportunity going forward is all about. And that's the driving force, I think, that needs to be brought home to these folks that don't seem to want to understand it. It's it's really, if there's more investment that your firm is going to be putting into the pot, or it's an exit strategy or any other opportunity that's the target firm is looking for, the key to it is what the future value is, not the current value.
Along those lines, Ben, can you point to an example within your existing portfolios of companies where the issue about growth was a lack of distinctiveness in the marketplace, and or anybody here on this panel stuck with the fact that we kind of blend in and we look and sound like everybody else? Has there been any situation recently with either one of your companies or one of the panels here, your own companies, where that's been the case? And then what have you done to change that, or at least help shape a discussion about a strategy that could help change that?
We do what was just discussed here. We do have one of our companies is packaging. Okay. And they're looking, to expand and grow and figure out what they can do next. So they spent about 1.5 years on some product development, and they came up with, but what they do is they speak with the clients. What do you want? What do you need? What don't you have? What are your problems? And they went away and they spent about 1.5 years developing products. They even had to buy a special press to make some of these products, and they would not let the manufacturer make the modifications. They wouldn't tell the manufacturer about the modifications. They brought the press in and made the modifications themselves so that nobody else in the market would know what they were up to.
Okay.
And so now we are out trying to sell these products. Unfortunately, the struggle is it's a very long lead time for their clients, so it takes about another year and a half to get through a client's sort of approval process and testing and all that. So right now, we're sort of sitting with a couple of the products now in test in the market. But it's nerve-wracking and it's
Right.
nail-biting, right? It's expensive. It's going to take 3 years before we get revenue from it. Our guys are beating on them. You know, what are you doing? What are you doing? There's cheaper products in the market, but this is a better quality. So, you know, it becomes a real struggle. So we had one client or one customer who was just about ready to buy one of these new products, found an issue with the glue, and said, we still want to work with you, but went to a much cheaper product that we produce and has a really low margin. And so, okay, I think that's a win.
Right, the jury's
But,
still out.
But they're out there, they're continuing to push the products and get it into.
So this was innovation. It was an investment in innovation.
Yes.
Tied towards commercial opportunity, maybe not necessarily towards a commercial strategy that would produce immediate results.
This is a
Did you
long-
know? Did they know all along that there was that lead time?
No, that came.
Big mistake,
Yeah,
right?
they
Build
didn't-
it and they'll come.
They-
Who knows?
yeah.
The road was all the way down there,
Yeah,
right?
I think they were really surprised by the year and a half lead time to really get the
Everything right
product.
but that one piece.
Yeah.
And I'm seeing people, Jay.
Sure. So we did something interesting. About a year ago, we started to have all of our internal management meetings using a video conferencing technology. So partly because all of our executive team and many of our people within our organization are spread out amongst 9 different locations. And so we felt that it was important for us to be able to stay connected in an important way. Video conferencing allowed us to do that. Technology now allows us to do that. Pretty interesting. And so what we've been doing recently, this is very new for us, but we're able to private label the technology, number one. And then number two, we've started to send little cameras off to our client, physician or the practice managers within our client. And we're getting them to get comfortable with and be engaged with us, with our client managers, and with our sales team, using video conferencing sort of as a value add. Because a big part of, in our world, what we're really selling is, and what, our service level is around information.
Right.
And empowerment, making sure that, because we've got, all this vast amount of data, but in some ways we're data rich, but information poor.
Well, but there your issue is where Blinn's company issue was about duration of the sales process and an ability to begin to be able to realize a return on that investment. Yours could be that you're going to assume that they're willing and able or flexible to change behaviors, right?
Right.
They have to be willing to say, I'm now going to use. There's risk with that.
There is.
Has there been any pushback?
Yeah, certainly. We don't have a lot of compliance to it yet. But as part of that, we by having our management team get comfortable with the process, and so we send out client managers to have face-to-face meetings. So part of that discussion, as they're in the field, as they're with our client, is that they will actually participate with other people.
We'll be there with you.
And get them used to it, get them comfortable with it, and then it sort of blossoms from there. So far the traction has become pretty good.
Okay. Tom? We'll go down the line as well. Yeah.
At the risk of moving the conversation a little bit, Blinn brought up I think a very significant point, and that is quality. Although the thinking in terms of how far down the line are we and all that probably should have been part of the conversation. Quality is something that as CFOs we all should be driving. Again, in my little world at Consolidated, what I've developed in the organization, not just the finance organization, the entire organization, is quality metrics. The operations folks have quality metrics. The finance folks obviously do. The folks out in the field that actually make our money. They've got quality metrics. The one missing piece that we're looking to shore up sometime in the fourth quarter is having a quality manager. In our world, in construction, we have project managers and we've got foremen out in the field and all that, but they know their world. They don't necessarily have the vision of what the company's perspective is on quality. And, that gap is going to get filled by a quality manager that is going to be responsible for the enterprise.
Can I ask you a
not just
question?
job.
Are you going to redeploy someone you already have in place, or is this a talent or skill set you're going to have to bring in? Because so far, a lot of what we talked about is about redeploy, right?
Yes, and it absolutely is redeployed.
Okay, good. All right.
We've got one of our best foremen out in the field that runs his job. I don't even have to look at his jobs because I know that they're going to come in above budget.
Okay.
The challenge is to have all of our other foremans learn from him.
Right.
And that's
And
where-
be willing to, and more importantly, create accountability around the learning too, based upon the
Exactly.
performance.
Exactly.
Right. And people don't like change. Right. Ted?
We've been talking about innovation as a way of driving revenue growth, improving profit, value generation, et cetera, et cetera. There is a wonderful framework for this that's actually been boiled down into a book called The Lean Startup, and it has a concept called the minimum viable product, and it works in startups. You've heard me describing how we used a minimum viable product to start learning from our customers, and it works in big established companies who want to take a slight right turn.
Yep.
Yeah.
Which is what we're all really doing right now, right? Doesn't everybody feel like that's what we're doing in terms of corporate growth? It's all a bunch of slight right turns.
And the power of the lean startup methodology is that it's a great way to take the risk out
Right.
by finding out, in week one,
Right.
oh God, I just signed up for an 18-month sales cycle. I had a second point I wanted to make because the
Yeah, we are.
2-minute warning
Yeah.
just showed up. For those of you who are worried about being lonely when you become the CFO, stop worrying. I learned my approach to the CFO position in a different environment than some of the other people we've
Yep.
talked about here. And the way I came to believe that my job is that my job is to help everyone else in the company do their jobs better.
Well, I think we have uniform agreement here, and we probably have uniform agreement here in the audience, right?
And therefore, I'm not the loneliest guy. I'm the guy that everybody comes to before they go to the CEO to say, hey, let me figure out how we can do this. Because he listens to you.
Ted, that's a valid point. I have one takeaway while we're getting close to the end. Think about it this way. You are on the right path and in the right position if you have an ability to send an internal communication or external communication on December 31st, 2013 that says, if I impacted your performance at all in any way over the course of the last 12 months, then I want you to show up in this room and the room's full, right? That means we're not lonely, we're just what?
Indispensable.
Indispensable. The CFO is indispensable. I like that. So I know we moved very quickly, and I wish we had more time. Is there anybody have a question that they're going to say, I need to ask it, or it's not, or I'm not going to feel like I did my part? Yes.
I have a question for Tom. How do you balance between liquidity? So how do you balance liquidity between building enterprise values versus distribution policies in terms of privately held companies?
Well, the challenge always is how do you get to the growth mode that you want to be in, and being able to get a reasonable return. The simple answer to that question is that I've got owners. I don't have shareholders, and owners they tend to feel change very quickly, and the key to the concept of growing the business profitably is always right in front of us.
Yeah.
Yeah, I think our challenge right now is more the owners are kind of turning into more shareholders positions. They're way out of the day-to-day operations. So trying to align those two conflicted requests at times is challenging.
Great topic discussion and something to connect with here. If anybody can help or offer insight, I suggest that you do so, because that's what we're really all about. With that, unfortunately, I have to stop us because we have to stay on time. I want to thank you first for allowing us to have a dialogue that I hope you found valuable in terms of the perspective shared and the some brief insights offered that we could certainly go deep on at some point in time. I want to thank my panelists for speaking so candidly, number one. We're comfortable amongst peers. And more importantly, admitting more what they don't know than what they do. I appreciate that, because that makes for an opportunity for us to continue the connection and continue the exchange. So my second two takeaways beyond what I offered was, we will make sure that we point to the blueprint, design, and book that you mentioned as a takeaway from here, so you could say, what else did I get out of this? We'll make sure everybody has an understanding of that. And I will also suggest that you connect with my colleagues here and connect with each other, because I truly believe that we will all be better off through collaboration and exchange. With that, I thank you, and I wish you the best for the remainder of 2013 and beyond. Have a great afternoon.